Ras Al Khaimah Digital Assets Oasis presents the Web3 Confluence. Deep dive dialogues to unpack the world of Web3. Luke Froehlich, Chief Commercial Officer of RackDAO, in conversation with Federico Tenga, core developer at Tether, the issuer of USDT, the world's largest stablecoin by volume.
Good morning, Federico.
Good morning, Luke.
Super happy to have you here. We're going to spend a little bit more talking about stablecoin, the biggest topic at the moment in the crypto digital asset space. Before we get into the topic, I'd love to hear more what you're working on at Tether.
I've been working in the industry for a while. I've been over 10 years working in the industry, so I saw it growing. Currently, I'm working at Tether on a research and development project because Tether is not only a financial company but also a technology company. Specifically, our team is working on contributing to open source development to enable the possibility to have tokenized assets on top of Bitcoin and the Lightning Network, because we believe that the security guarantees and stability that Bitcoin offers are unmatched in the crypto ecosystem. So it will be very important to have in the future the possibility to develop the tokenized ecosystem that is growing very fast in this period, not on altcoins that sometimes can have some degree of centralization, but to be able to do it directly on the real deal, directly on top of Bitcoin.
Super interesting. I definitely want to go back on the idea of using the Bitcoin blockchain as your level for underlying source for token. Talking about tokenization, let's stick to the tokenization of fiat money. So stablecoin, you can see them as the killer app. It's arguably the only product with an established product market fit. What is your view there? We have a market of about 230 billion as of today. Where do you see this evolving?
I would make a step back. First of all, I think in general, when we look at the crypto industry, there are probably three product market fit, like Bitcoin for the store of value. You have stablecoin for fiat payments that actually have a good user experience, unlike the traditional fiat payments that in many cases they're not so convenient to use. And then you have all the rest that I will put it under sort of umbrella of decentralized casino, decentralized gambling, that is still a use case that the market wants. We can still call it a market fit in a way. Stablecoin are actually very, very interesting. Maybe they were a bit unexpected to emerge. Like if we look back a few years, because for example, Tether has been actually around for a while. I mean, since 2013, 2014, Tether was available. But for a while, there was not much interest in the market. But then, as the crypto industry grew in 2017, the players in the market, especially the traders, they need to have a tool to move US dollar denominated collateral between exchanges without having to go through the traditional fiat raise. Because if you wanted to do arbitrage between two Bitcoin exchanges, that were quite significant arbitrage opportunity because of different jurisdiction and difficulty to move fiat around. If you wanted to sell Bitcoin high on a Japanese exchange and buy it low on a European exchange, nice trade you did, but then now you suddenly have fiat that you need to move from Japan to Europe, and then it's going to take a while. So it's not going to be very efficient arbitrage. So with the introduction of stablecoin, that it made it as fast as a Bitcoin transaction. So that really changed the game, and it really made the market much more efficient across different venue in different jurisdictions. So this is why stablecoin became started growing at exponential rate. But actually, I mean, that's only part of the potential, because the same problem that crypto trader had. Actually, a lot of industry have the same problem, that moving fiat around across international border is a problem. And not only that, in certain jurisdiction, in certain parts of the world, it's even just hard just to get exposure to the US dollar. Now, if we come from a country with a developed financial system, we take this for granted. Okay, you just go to the bank, you can easily get exposure to the US dollar in various ways. In vast part of the world, this is not possible, and a lot of people, they prefer to have exposure to the US dollar compared to the local currency that is always subject to hyperinflation. So that is where stablecoin can really have an impact in the real economy, because crypto trading is fun. Like if international commerce and letting people in developing country be able to easily save in US dollar, that can really be a game. So that is like where the stablecoin industry needs to go. So not much for developed country. Stablecoins, I don't think they are for Americans, for Europeans, of developed Asian national. It's mostly for it really makes an impact for those places where having exposure to US dollar currently is not possible, because the banks, they don't want to do business there because there is not enough money to make for them.
So you touch on a few very interesting points. First, I'll bounce on your point that stablecoin were seen as boring. And I do remember that there was nothing really exciting about that. You mentioned 2017, there was a lot of excitement in the ICO place, and didn't people necessarily pay attention to stablecoin, but yet in particular when the market is calming down, the risk appetite is disappearing, people refocus on the basic stablecoins.
Okay, not everything needs to be fun.
Yeah,
Some
exactly.
stuff can be boring, but useful.
Useful and stable. The second point that you mentioned is an interesting one about emerging markets. So another topic that I've seen be seen as boring was central bank digital currency, CBDCs. And the case has been made, and I was pretty much also most of the time on this side, to say, what do we really need CBDCs in developed economies? I think this seems to be making more sense in the emerging markets. You think also in the case of stablecoin, especially talking about the use case of cross-border transaction, this would be specifically for emerging market and not so much for developed market?
Well, to some degree, sometimes like cross-border transaction can be complicated also between developed markets. I don't know, even bank transfer between the UAE and Hong Kong is not always the thesis. Like there is for sure appetite for stablecoins also among big players, like I don't know, for example, commodity traders. Not because they don't have access to the US dollar, but because the way they have access to the US dollar often is not good enough. So if it takes even just 4 days to set 3 or 4 days to settle US dollar payments in some industry, those 4 days have a cost. Like, you know, imagine like you're a commodity trader, so you have a bunch of goods on a cargo ship, on a vessel ready to depart, and you need to wait for the US dollar settlement to actually like accept the goods or let the vessel go. And those are like a real money. Every day the vessel stays in a port is like a lot of money, and same like many other industry where time is money. So if you are able to have an instant settlement of your US dollar payments, it really improves the operation, it really reduces the cost, and benefits can also go down the value chain to the end customer, whoever the end customer will be. So I think there is value for on one side for developing markets, but also for connecting developed economies that are not so well connected by traditional fiat rails.
In this context, so do you see stablecoin as working as a complement to traditional payment rail or as a substitute?
Right now, it's working more as a complement. This is my personal opinion, but the way I see it is that currently like many people that use stablecoin, they still like on one side of the flow, maybe through like some third party, there is still like a fiat hook, like somewhere like the stablecoin is still get converted into fiat. And this is like, as long as, I mean, this takes away part of the potential. I think like once the stablecoin adoption is more widespread, then when you don't need the fiat hook anymore, you don't need a fiat leg in the flow anymore, then it's gonna become, much more efficient, because I get paid in stablecoin, I pay my supplier in stablecoin, and we don't need to touch fiat at any point of the flow anymore. So also like you don't have the cost of moving stablecoin into fiat. You don't have the friction of the traditional fiat banking rails. So that is gonna be like the real game changer, but it's gonna take some time, because you need time to create a network effect around stablecoin, so that all market participants along the value chain are able to accept it as payment and use it as payment.
We focus a lot on the use of stablecoin for payment. Now, as you mentioned, it's still a very small share of the market. The traditional payment rail is still representing the lion's share. So I'd like to talk a little bit more of the other use cases of stablecoin. Back in 2019, I had the opportunity to work with the World Economic Forum, BCG Group, to look at how stablecoin could be used, for instance, for financial inclusion. We explore different ways to use this, especially in emerging markets. But as of today, the lion's share of the stablecoin is still being used to more oil the trading, the day trading activities. So in terms of other use cases, we talk about payment, trading. Do you see other areas where stablecoin could be playing a key role?
In developed market, I think they will be used also for saving as well. Because if we like to complain that the US dollar lose value with inflation, which is true, which is why also we have Bitcoin. But if your local currency has like a 20% inflation per year, then you don't care too much about the 3-4% that US dollar has. So you can save in US dollar. It's already a massive improvement for you. Myself, I like Bitcoin. I like to save in Bitcoin, but I understand that I can be comfortable with Bitcoin volatility, and I can be comfortable with the complexity of dealing with Bitcoin. But for many people, like the US dollar is already such an improvement that it really solves most of their problem, and the value is not so volatile. It's really what they really want. So a stable coin can be used. In developed country, we see more like as for trading, for payments, because we will never want to have savings just in cash, in fiat. Like we will savings, we usually want to have them invested in something. But when the alternative is lose 20% of your value, then just cash US dollar, it's already amazing. So for a lot of people around the world, there is also the use case of stablecoin for saving.
So you mentioned also an interesting point. You talk about the use case of stablecoin for savings, more like focusing on the US dollar. So I'd like to shift a little bit and look at the different models of stablecoin. So for now, we've been mostly talking about fiat-backed stablecoin, which represent about 90% of all the stablecoin, typically in US dollar. What's your view on the additional new models that are emerging with different collateral? I was very excited when DAI emerged, and I started questioning or being a bit disappointed when I was looking at their reserve that were shifting increasingly to USDCs.
It just becomes like a derivative on top of for the stable coins.
But there are other examples like Ethena, for instance, that have started introducing a new model of stablecoin. Innovation do you see in this space? Are you the specific models that you find exciting?
I think like all this innovation is great, but it's fundamentally different from stablecoin. They call themselves stablecoin, but in the end, it's more like an investment vehicle to have exposure to some sort of return, whether being like from the cash and carry trade or from exposure to treasury or stuff like this.
There is a thin line between hedge fund and stablecoin.
Yeah, I think it's maybe it's a bit of. They like to use the branding stablecoin because everyone talks about stablecoin, so cool. But I see them as a very different product. Because it's basically an investment product, like a low yield, low risk investment product, which is amazing. Its value is gonna be very close to the US dollar because it's a low risk. But it's fundamentally, a different product. It's like buying treasury, same thing as having dollars in your bank account. And also, so you cannot expect also them to reach the same level of network effect. We all prefer to have a treasury instead of dollar in the bank account, but we are not really going to pay for stuff in US treasury because there is also all sort of complexity, also the fungibility of different investment products. So I think, those tools, they for sure have a role. They are quite useful, especially, again, like for people that can just go to the bank and buy treasury, or maybe they can do it, but the bank will charge a ridiculous fee for it. So there is for sure a market for those products, but I see them as a fundamentally different product than stablecoins.
So there are a range of products that hide behind the logo stablecoin, from real stablecoin to more like investment vehicle. How do you guys go about education, right? It's one of the challenge of increasing adoption is making people comfortable with stablecoin. What is Tether doing in this space?
Tether actually is very active on the education side. We have Tether has multiple initiatives that promote education, not only around stablecoin, but also around Bitcoin and the crypto industry in general, because the biggest challenge is education around the technology part of it, especially when it comes to stablecoin, because everybody understands US dollar, but maybe they don't understand the how to interact with the the technology behind the stablecoin. So to have your own like wallet to if you want to do self-custody to manage your keys, what does it mean to manage your keys? What are the trade-offs and all of this? So Tether is promoting multiple educational initiatives around the globe. In developed market and in emerging markets, for example, in El Salvador, did a lot of educational initiative, so as in other places. So it is very important, the educational part, because it's one of the great, I think there are two barriers for adoptions. One is motivation and the other is education. So people are starting to see the value in stablecoin and Bitcoin and crypto in general. So the motivation part start to become like easier, but then maybe they're still scared about like how do I handle this? Like I'm used to just have like my bank doing everything. Suddenly when I do a payment, it's a bit a different experience.
Yeah.
So, and also like to understand also the risk involved in self-custody, or when it comes to digital asset in general, the risk that each digital asset can carry. So education plays a big role. It takes some time to provide dividends, because it takes a lot of time to educate all the people that in a specific industry or in general. Over time can really make a difference, because suddenly if the technology part is no longer scary, and it's only a matter of market fit. Like, do I need this or not?
In this respect, market fit, education, how big a difference do you see between the retail clientele and the institutional clientele? So we've seen a lot of institutional players starting to onboard stablecoin. How do you differentiate between the education and the understanding level?
Sometimes for the institutional player, it's more that they move slowly in general. I mean, they don't have the flexibility that a normal retail guy will have to adopt a new technology. So they have all kind of processes in place, or like they interact with other players. They struggle sometimes, not maybe to understand the value, but on the execution side, to actually being able to adopt a new technology. Also because sometimes they have to double check with their regulatory requirements, or like their business partner are okay with them using this tool. But the institutional player, it's more a matter of they're a bit too big to move fast, so it will take time. While on the retail side, it's probably more of an educational issue. Like they usually are not aware, or they don't care too much, or the efficiency gains. Retail people, they are less attentive about these improvements in, it will take me, maybe my transaction will be a bit faster, will be a bit cheaper. I mean, we are less sensitive as individual to business. So also on the side, there is a bit of inertia. So education can help with it, because if you don't spend the time to look into it, then it's easy not to care and to move on with the other things in your life.
So you talk about also adoption with retail investor, and retail investor, they look at different vehicles that they have. Like we talk about savings, for instance, and in the case of stablecoin, the criticism comes sometimes about the fact that it's the stablecoin issuer that benefits from high interest rates on the reserve via treasury, and that is not being paid out to the user of the stablecoin. So what is your view on the evolution of this model of yield generating stablecoin, and how a holder of stablecoin can continue get some yield out of their holdings?
I think it's the same situation with the banks. If I have money in my current account, often like you get no interest at all, or like sometimes like a very small one. But the thing is that there should be stablecoin should be seen more as the equivalent of the available cash that you have to for like immediate expenses that you plan to have. I mean, we say that for some people it's also good for savings, but it's good for savings because, but maybe this will also change over time, because it's good for saving because right now they don't have access to any like good investment opportunities. So, like if you are in a developing country, banks don't want to open an account for you because you're not rich enough to be an interesting customer for them. Like what do? You either keep in cash, or like in some countries very popular to buy small amounts of gold. But as people are on board into the digital asset economy, they will start with stablecoin, and maybe later on they will transition also to actually have a saving account with actually investments in in product that can either appreciate or generate an interest.
That also actually continuing on this topic, you mentioned that I like the comparison with the stablecoin being the cash available. Now we've seen also over the years new type of simple investment product being tokenized, like money market fund.
Yeah.
So where do you see this evolution? Because I could argue it's like give me a tokenized fund instead of tokenized US dollar. At least
absolutely no. Yes, there is for sure a market for that, because if you live in a country with a good financial ecosystem, then you say, yeah, I can just go to my banking app and buy treasury. Why do I need it tokenized? But that's not the case everywhere.
Yeah.
So to have tokenized treasury or tokenized financial instrument, like I don't know, tokenized stocks, tokenized ETF, whatever, it can be very interesting for places where people cannot just go to the bank and have exposure to those instruments, or they can maybe it's for a huge fees. So I think like once people have their start having exposure to stablecoin, then they can also easily access this tokenized investment instrument easily, and then they will start using stablecoin for payments, and eventually have part of their savings into this tool. But it also requires some education, because again, sometimes people they just don't care. They just think US dollar is good enough, but it also requires some financial education. That is needed everywhere, not only in developing countries. I think also in developed countries, financial education is still very much missing. To understand that, over time it's better if you keep your savings in something that can generate some interest or can appreciate in value. But you need to manage the risk, so there is some complexity there. But once it's just a click away, then it's also easier to educate people, because they can try right away. It's not only something abstract that they won't actually be able to do it in practice.
Literally, stablecoin can work as a gateway to this more sophisticated type of product.
If we can imagine the future, I think stablecoin can take the role that now has cash, or cash in your bank account, and then you have this tokenized product that can take the place of the current buying bonds, buying treasury in your bank account. Like you can do it directly from a variety of providers through the tokenized products. And then you have Bitcoin and tokenized gold for protection for inflation, for the role that they should have in the investment portfolio.
Different use cases, different instrument. One question that I wanted to ask you, we talk a little bit about the central bank digital currency, the CBDCs, which used to be hot. Yeah. And one of the things that I found I'm talking like 3 years ago, is when suddenly the expectation was for every country to issue the CBDC. And I thought, what's the improvement if you move from hundreds of fiat currency to 100 CBDC, which technically also of fiat? Looking at stablecoin, so we have obviously a market that is pretty concentrated. It's like the two top player taking the lion's share of the market. But we have seen over the past year or so also an increased interest from bank, from tech provider, from payment provider to launch their own stablecoin. And we are potentially moving into an environment where there could be dozens, if not hundreds of stablecoin. Do you see value add from having so many stablecoin? Is it really an improvement, or are we moving backward in the sense that you're going to have a stablecoin, but yet you need to swap it for other?
If we have a lot of argumentation with multiple stablecoins, then people will have to swap it around to be able to do payments. But it still can be an improvement. If they are liquid enough, then the swapping between them should be cheap enough that it still makes sense to use them to make payments around. And there can be fragmentation on the distribution side. Different players can be able to distribute to different market, to different segments. So if a bank already has a customer base, it will be able to distribute among its customer very well. Single player is not going to be easy for a single player to distribute to every human in the world. That's for sure. So there is for sure a role for fragmentation on the distribution side, but on the liquidity side, it's going to be harder. So on the liquidity side, there will still be concentration when you want to swap from the stablecoin in El Salvador to the stablecoin in Vietnam. You will still have to go through one of the big liquid stable coins that have global liquidity. Yeah. So there will be stable coins that have global liquidity, and then there will be probably Yeah, it's realistic to believe that there will be a bunch of smaller stablecoin that can target specific markets, specific jurisdictions, specific segments. They can just onboard the existing customer from other businesses to the stablecoin. I mean, that's it's possible. I mean, it's not an easy job because it's distribution is the hard part of this job, but it's definitely a possible future.
So I'd like to drill a little bit into the topic of distribution. As you mentioned, it's a hard one. And we've seen emerging a lot of models where not just a bank, but a bank and maybe a telecom provider or a tech company would create a consortium. I think the idea is to simplify the thinking in terms of the distribution and make it more readily available. In terms of distribution, which are the models that you think are the most promising in terms of increasing the use or AUM of a stablecoin?
The point is, where stablecoins are needed, it's like mostly in the developed market. So you actually need to go on the ground and do the hard work or going on the ground and push for like stablecoin usage among either business partner and the final retail users. So that's an hard job that not everyone is willing to do. You see many players in the industry that they're very much focused on the US market, on the European market, where it's everything it's easier. But then it's less useful because you already have a very efficient financial infrastructure. So I think those that will be willing to do the hard job to go boots on the ground on the in places where it's harder, then they can actually gain the adoption and the network effect to be able to have global liquidity all over the world.
So once you've gone through the adoption threshold, educated people, then you need to have boots on the ground and figure out
you need
how
to have people on the ground that talk with all possible partners to have it integrated, to educate people, to use the stablecoin, to integrate it with local wallets. Like right now, you still need like some fiat rails. All of this job, I mean, it takes time, it takes effort, and to coordinate teams in different countries. I mean, it's not an easy job. So whoever is gonna be good at executing it is gonna be winner of this race. But first you need to have the willingness, because you see some participants into this industry that they are more focused on the fancy markets rather than the hard ones.
And the concept of partnership, even like getting cash back on the transaction that you execute with your stablecoin, is little incentive for people to actually adopt your stablecoin.
Yeah, you don't need to partner with JP Morgan. You need to partner with a local ATM provider in Brazil and this kind of stuff. So,
what about the industry itself? We're seeing now Circle, which is moving toward IPO, which is very much like a legitimation of the business model. Where do you see this trend, if there is a trend, evolving, and how other players, you think, are going to position themselves?
I mean, for sure, a lot of people want to have a share of this business because they saw how profitable it can be, especially when there are high interest rates. So as we already seen, there will be more and more players that will try to enter this business, especially also from the big incumbent in the banking and financial world. I think we'll see more banks, more big financial institutions that will try to get their piece of their share of the pie. But again, if they are not willing then to do their job, to go where the stablecoin actually have a true value proposition, they really bring value, can have maybe that they will be able to say that they have a lot of maybe billions in the stablecoin, because it's like the banks itself that put the billions, but it's not gonna be able to have the same level of distribution. I mean, it's great. I mean, in general, it is important if as an industry we solve problem for people. So if more players are into the industry, more chance there is that actually the problem gets solved for the end retail users, for the people that can benefit from this. But it needs to be like with the right attitude and with the right understanding of for which people these tools actually are.
I like your point about the high interest rates background, because this has been a very a rush to build your reserve, like printing money literally for.
Yeah, it will be interesting to see like if there will still be so much interest when interest rate will eventually go down. because now it seems like the money business that people give you money and you make money very easily without doing anything. Eventually there will be a point where interest rates will go down. It will be interesting to see who is still gonna be willing to be into this industry and who is gonna move to other things.
Federico, it's been a pleasure sharing all this information with you and discussing. Is there like a last point that you wanted to highlight in terms of your thinking of where this industry is going, or the type of talent that we need to bring in this market, or regulation, or anything that can helping this industry to move forward?
Yeah, first of all, I think many people often argue that if the US dollars is eventually keep being inflating its value away, why do we need stablecoins? And that's a valid point. Yes, stablecoins as we know them today are not gonna be here forever, because eventually people will not be interested to have exposure to the US dollar anymore, because if it keeps losing value and there are better alternatives, it doesn't make sense anymore. Sometimes people ask what is gonna be the next thing. I think the next thing is just gonna be that Bitcoin is considered stable enough that people can directly use Bitcoin, or also a product like tokenized gold is also can play a role into a future where the people don't really want to have exposure to the US dollar as much anymore for either for inflation related reasons, or could be for geopolitical reasons that some countries don't want to have exposure to the US dollar. So I think so this interest started with Bitcoin. Now stablecoin are the cool thing, but eventually we'll go back to Bitcoin, because at the end it's the hard asset where you can store value, and if you can store value, then you can also be happy to accept it. Problem is right now is too volatile and everything is denominated in US dollar, so it's too convenient to use US dollar, but eventually we will go back there. Regarding the talents that we need to bring, I mean, for sure, this is not an easy business, so there will be need to have more people that journey into the industry if he really wants to become to get 5 billion people onboarded, and it's gonna be people that are able to distribute into markets that they need to know the market well. They need to have the ability to know how to distribute this product into all kinds of markets where they are actually needed.
I love the view. I've shared this view that Bitcoin is probably the best monetary good that we've seen. And what stablecoin, if I follow your thinking, are doing at the moment is actually establishing this adoption, establishing this...
Preparing us for Bitcoin, in a way.
And swapping the collateral.
In a way, it's great, because there are two factors that create friction for Bitcoin adoption. One is the asset volatility, the fact that it can be scary, and two, the tech part. It's for people it's easier to use legacy technology. If stablecoins solve that, onboard coin can be seen not as scary on the asset side because it's stable in dollar, and so people can do the effort of learning the tech. Once people have learned the tech, then switching to Bitcoin, it's much easier, because it's just about switching understanding that US dollar also lose value over time, and Bitcoin is superior as a store of value and as a monetary instrument in general. I mean, it's on paper, if you look at it, Bitcoin is perfect, while US dollar is still has all the flow from the humans that manage it, because humans flows, and so the money managed by humans also will flow, and we see this with inflation and the politics getting into what the amount of printing and this kind of stuff. So stablecoin, I think, are preparing the world for the eventual Bitcoin adoption. I don't know how long it's gonna take, maybe 10, 30, 50 years, I don't know. The time scale is very hard to predict, but the direction it's clear.
Fully during our lifetime. All right.
Yeah.
Thank you so much for your
Thank you for the invitation.